Investing in the stock market or buying a house, which option makes the most financial sense down the line? We'll look at these options in the time frame of 2 years, 5 years, and 10 years and see which one has the best benefit to your net worth at each of those points in time. We'll also look at the dangers, the upsides, the downsides of investing in each of those options. And I will talk about this from my personal experience from having an Airbnb business and from investing in the stock market. Hi guys, Alex here. This is the Financial Pickle, and today we're talking about property versus stock market investment. Which one is better? Talking from my personal experience. So let's dig in. Let's look at two scenarios. Number one, you're buying a house in January 2022, and we assume that you have indeed got the keys on the 1st of January and you're ready to let the apartment and do whatever you want with it. We also will assume that you have invested all the money that you would have put down for the house, like the deposit, the taxes you would have to pay, lawyer fees and all this bullshit, into a stock market. And then we'll compare year by year what will happen with your investment in your net worth, given some assumptions on how the market will perform. So let's buy a house. Now let's assume you're buying a flat in London, because that's where I'm at, for £500,000. Although you can't really buy anything interesting for £500,000 nowadays because prices are insane. Have you seen the shit that you're gonna buy for like £500,000? It's ridiculous. Anyway, so 500,000 is what you need. The minimum you need to get a mortgage is a 10% deposit. There's like literally no way you're getting a mortgage without a 10% deposit. 10% of 500,000 makes you 50 grand, so you need to mortgage the remaining 450,000 pounds. The 50,000 that you have as a deposit, you need in your bank account. You then also will have to pay a stamp duty, which is a tax on buying a property, which will amount to around 10,000 pounds, 10, 11, whatever. So that's already 60,000 pounds. And then you also need the lawyering fees and other small expenses to finalize all the documentation and all of that stuff. So let's call it another 5,000 on top, just to be safe. So the total you need in your bank account before you can even start thinking about a mortgage is £65,000, which is a lot of money. Then you are borrowing the remaining 450,000 on a 30-year mortgage at 3.5% APR, which are variable, and it can increase or decrease, which is unlikely, over time. The next thing you want to consider is hitting the like button underneath this video. I heard the rumor that the more like buttons you click, the more likely you are to increase your portfolio, be it a property portfolio or stock market. I don't know how it works, but I heard that if you believe in it, it will work. To the next one. Yeah. What happens next? The mortgage costs you £2,000 per month. That's how much you have to pay to clear some of the principal and the percentage you pay on it as well. So you will be renting the flat for somewhere around £2,500 in the best case scenario. So we're looking probably realistically at 2,400, 2,300 if you're lucky. Let's call it 2,400 if the flat is in a good standard. Let's also assume that you have paid around £2,000 to make the flat look pretty before you rented it out. So that's painting, IKEA furniture, some pictures, all of that stuff. And we're assuming you're not paying anything to the estate agents because you found a tenant yourself, which is a reasonable kind of thing to do. Now let's look at your situation 1 year down the line. It's January the 1st, 2023. What is your kind of situation on the deal? Well, you have invested £67,000 into the apartment. You have paid £24,000 in rent. That's £2,000 per month over 12 months. And you have received, which is a good part, £2,400 per month in rent, which amounts to £28,800. So the profit and loss on the deal so far is minus £62,000, which is a lot of money. So let's look in the span of 10 years, when you theoretically will make your money back and what is the profit after the deal. We will assume the property market appreciates by about 7% a year, even though I think it's actually lower than that. Don't think it's possible to get 7%. I think we're going to be somewhere around 5% and not forget about inflation. But let's just assume it is 7% a year because that's the optimistic percentages that I've seen around the internet and from people that I've been talking with. So 7% a year your property appreciates. We'll take into account for each year how much mortgage is left, how much tenants paid in, obviously what is your debt from the initial investment. We take all of this into account and see what is the value that you will have if you sell your house 2 years down the line, 3, 4, 5, 10 years down the line, does it even make sense? So let's see. This is what we have. 2 years down the line, you're looking at £52,000. That is, if you sold your house 2 years down the line, paid off the mortgage that you remained, took into account the debts that you had originally, which was at that time somewhere around £54,000 left, then you would have £52,000 left in your bank account, which is not bad. That is a good profit after 2 years. 5 years down the line, we're looking at £260,000, which is pretty good. So what happens 10 years down the line? When the figures are going up exponentially, pretty much, and you're looking at £670,000 in your pocket, which is pretty good. But let's look what would happen if you actually invested the same amount of money that you have invested in buying a house, which is £67,000, and we'll look at it, what happens on the stock market. So here there are two assumptions. First, we're assuming you're just making 10% a year. You throw the money in, you don't really care about it, and you just make 10% every year on the money. In this case, you're fucked. There's literally no point, because 10 years down the line, you're looking at just £160,000, which is not very nice in comparison to what you would have had with a house which is £670,000, which makes obviously much more sense to invest that way. However, we assumed that you're only gaining 10% a year, which is a really lazy way of improving your financial situation. If you actually put the time and effort into it, you probably could make about 5% per month on your portfolio, you know, with wise investments, with watching YouTube videos, obviously, and investing properly. You probably could make maybe 3 to 5%. I'm sure it's a reasonable target. I myself, for this year, 2021, made almost 50%, and I wasn't really investing every single day. I just have one channel that I follow the advice, and I made 50%. Awesome. And also cryptocurrency, obviously. So what will happen if you actually invested and made 5% a month on the money that you've originally invested? Well, that's where the situation gets very interesting, because then you're making basically 60% a year, which is a bit of a stretch. So I assumed you were making only 50% a year. So every year your portfolio grows by 50%. This case, this is very interesting. At year 2, you would already have £100,000, which is pretty good. And then at year 5, you're looking at £340,000, looking very nice in comparison to the house, which would have you £260,000. So you almost made £100,000 profit, £70,000 profit, which is not bad. 10 years down the line, you're looking at £2.5 million in your bank account, if you're continuing the trajectory of making 50% a year, which is possible to do for sure, and the house would only give you £670,000. So stock market investment most certainly will give you much more money if you invest properly and you actually spend time on it, and you invested the same amount of money in the stock market. 10 years down the line, it would make much more sense to invest that way. What you also have to take into account is the downsides of each of those types of investment. Let's look at that. The downsides of actually owning a property are many, because I've managed about 10 apartments on Airbnb, which was a headache to say the least. Things break, you have to fix them, you have to fix the furniture, you have to repaint the apartments and all of this bullshit, which takes your precious energy and time that you could spend with your family or making money somewhere else. So when it comes to property, managing the apartment itself is work that you have to take into account. And you also will have to spend money on renovations and fixing things, on insurance and those side of things as well. Another thing, you also have to deal with tenants that can be good or can be bad. They can ruin your apartment. It will cost you, £60,000 to actually rebuild it, which could happen. Or you could have great tenants and never hear from them for the 10 years that they are there. It all depends on, basically your luck, if we're honest here. Another problem with housing is that it's not a very liquid investment, which means that it will take you some time to actually get the money back, probably about 6 months. And if you want to sell it quickly, you will have to part with quite a big part of your profit on the property. So that's another thing you want to take into consideration when you're thinking about which is the best place to invest. And if you will want a quick access to the money, property is definitely not the best place to store your money. Another thing you want to consider about the properties market is, as much as it is not liquid, it actually is in the same time. If the value of your property went up by say 7% in a year, what you can do is go to the bank and say, I want to remortgage it and get this 7% increase as another loan. The benefit of it is that you don't have to pay taxes on the loan that you're taking out. So you're basically just getting an extra £50,000, let's say, and you can use them, but you don't have to pay any taxes on them, which sounds great. And you can use those money to get another apartment. And that's where interesting stuff are happening in the property market. Let's look at the scenario. 1 year down the line, you have one flat. 3 years down the line, after the 2 years, you're able to remortgage and get yourself another apartment. So 3 years down the line, now you have 2 apartments. 5 years down the line, you're remortgaging both apartments again, and you already can have 4 properties in your portfolio. Another 2 years down the line, we're looking at year 7, you're looking at 8 apartments. Year 10, which is another 3 years down the line, you're looking at almost 16 apartments. Obviously, this is the ideal case scenario. Likelihood will be less, but even if you're at like 10 or 12 apartments, that is pretty goddamn good in 10 years. And even with 10 apartments, you're looking at a net worth of well over £2 million, if we take into account the mortgages that you have to pay back. You also have properties. You also are able to remortgage each property, all of them, every other year, and basically get the unlimited amount of money that you need without paying any taxes, and do pretty much whatever you want with them. Hookers, coke, and whatever, if you want to. Or you can buy another apartment and keep doing that. It's up to you. And that's where you get to the passive income, where you don't really have to do anything. If we say 10 apartments, each of them are profiting you maybe, I don't know, £200-300 per month. You're looking at say £3,000 a month. This is dropping into your account as a profit after you took out the mortgage and some repair expenses as well. We're taking into account £1,000 of repairs for each of the apartments. So you're looking at £3,000 of passive income where you don't really have to do much, which is not that bad. When it comes to the stock market, there is also a lot of downsides. Number one is it's unpredictable, and you can, well, not lose, but lose the ability to withdraw money quite quickly. Case in point, for example, 2 months ago, I had $20,000 in my portfolio. That's how much I have invested. And then a month down the line, I had only $13,000 in the investment portfolio because the stocks dropped, the cryptocurrency dropped, and suddenly my portfolio is down. That is not a problem for me because I am investing in long term and I don't need access to this money. So I don't care if it's down 99%. I know it will go back up after, maybe 6 months or maybe after a year. I already see positive trends with cryptocurrencies and some of the stocks. But the problem is, if you need quick access to the money and you need this £67,000, a year down the line, it's unpredictable whether you can actually take this money out or not. Because if the stock market drops down by 20-30%, you're kind of f***ed, because you are either losing all this money where you have to close the position and then you lost the money, or you don't have access to actually withdraw the money and you have to wait until the market goes back up, which is one of the difficulties with the stock market as well. In conclusion, we have stock market versus the property investment, which makes more sense. When in reality, it looks like property investment is the best choice to go to. And there is a reason why there's a lot of millionaires and billionaires that made their fortunes in the property market. It is because of this ladder system where you take one mortgage, which is very difficult, but it's much easier to get the second one because you can remortgage, and it's much easier to get the third, fourth, fifth, 10th, and the 50th and the 100th if you need to. There's also some liquidity in there where you can remortgage money and without paying taxes, receiving the benefit of appreciation straight away into your account that you can spend on anything, again, without paying high taxes, which is great. With the stock market, you have probably added liquidity where you can liquidate your portfolio, you can do this, you can do the other. But in the same time, if you don't know what you're doing, there's a high risk of you losing a lot of money quite quickly. With the property market, it's a little bit more stable, and you can be sure that even if it drops down 100%, it will go up because people need to live somewhere, and it always go much higher than it used to be. So you can guarantee yourself that if you buy a property, you are very likely to improve your financial situation 2, 3, 4 years down the line for sure, and increase your net worth. So if it was me, probably a property is a good investment, even though it's pretty fucking scary. That has been it. Thank you very much for watching this video. I hope you liked it. If you did, hit the like button and subscribe to this channel. I would love to hear your opinion about this whole shebang. What would you invest in, properties or stocks? Or if you have invested, what is your experience and what would you recommend? I would love to hear your feedback and your experience. Thank you very much for watching, and I'll see you in the next one.
We gotta make them right. Chillin' with mine. We triple up, they on the double up. Triple dub. Came from the basement, we only going up. They loving us. Up in the booth, I'm getting dizzy, but they the cup is up. Toast to my people that's on the come up, and you live with us.